Hi, Harry here for the Rant on Friday the 27th. I'm working on the February issue of the newsletter, and it's all about China and Japan. Why? Japan was the first developed country to peak in its demographics and spending capacity. And its stock market peaked a long time ago and will never see new highs. I've been saying this for years and people don't get it. Well, China is that for the emerging world now. It is the first emerging country to potentially peak for a long time because it overexpanded its economy. One of the things I always get is, from economists and a lot of people, questions on media and stuff. Oh, state-driven capitalism. That's the new model. No, this is going to go down perhaps as the biggest mistake in history. And thank God for me, China, I think, is going to prove this. China now is sitting with 22% or more. Last statistic, the good statistic, was 22%. It's even more of that now. Empty homes and offices. No free market system would ever allow you to get that far without a shakeout and weeding out the companies that overinvested and the people that overbought at high prices and stuff. So what the biggest perspective today, and we're right in the thick of it here, okay? The U.S. was the leading country coming in, driving the bubble into the roaring 20s, okay? There was two bubbles there, one into 1919, a crash, and then the final one into 2009, and then the Great Depression. We led that boom. We were the up-and-coming country now competing with more established Europe, and we triggered the bubble and the burst, and then the whole world went down with it. Well, that is China today. China is the up-and-coming country. Japan, again, first in East Asia to peak, and again, progress has just gone from east to west ever since the Dark Ages, okay? It's gone from Western Europe to Northeast to Midwest US to the West Coast. And then Japan was the next big star. Well, Japan flamed out, Its spending wave, its demographic trends peaked in 1996. Its stock market peaked in 1989 because of a great bubble, and its real estate market in 1991 to follow that. And then both crashed. China's doing the same thing, the first emerging world country to do that. And why is this more important? China now is the second largest economy in the world, just like the United States would have been compared to Europe back in 29. It's got the greatest bubble, okay? And the bubble is more in real estate and stocks. Its stocks are way off of its side. China's stock market's a lot smarter. It peaked in 2007 and has gone in a triangle sideways, lower highs, okay? It saw that the future wasn't so great in China, but the government has encouraged building and home builders can just build, throw caution to the wind, and the government will cover up and not let the economy fall down when there's 22% homes empty. So if China finally tips over, which it's showing signs of doing, its stock market, I'll show in this February issue, is right on the edge of breaking out of a giant triangle pattern, which will take it down to 1,000, down 86% before you know it, and then it's over, okay? It's hard to come back from that, and you lose the confidence of the citizens, and you got to remember, China's government, China's not a democracy, as most of us know, and a lot of people keep, have come to me like, oh no, Harry, but state-driven capitalism, like, etc. That's the new thing. No. State-driven capitalism is the worst capitalism, okay? Because the state, especially in China, when you're not elected, to keep the confidence of people, you have to keep them happy. So what do? They've overstimulated more than any major government, any major economy in history. Greatest bubble in history ever in modern history. And when real estate bubbles burst, it hits everyday citizens of the economy way worse, because real estate is leveraged with mortgages up to 80-90%, okay? Most people don't buy stocks on debt, okay? Just traders do. So real estate is owned by far more people, and 75% of the net worth of Chinese and owned by 80-some% of the people in a country that can't even afford anywhere near, still a third of our standard of living at best, adjusted for cost of living. So this is a big deal. The China real estate bubble is cracking. Prices are finally starting to go down for the first time in a long time, and I think that's going to build on itself. The U.S. stock market's at this key point. We had that first crash, which I've been waiting on. A bubble is not over until it crashes at least 28 to 30% on the first crash, and we got 34% on the NASDAQ and since 38. But the U.S. markets are now in this, it can't rally very strongly, which is a sign of weakness, but it doesn't want to break. I've been saying in my newsletters and updates for a good while now, we break 10,089, the most recent low on the NASDAQ, okay? This thing's going to fall faster. We're going to be in what I call the third wave down. Remember, all major bull markets are major bear markets now. One wave down a bear market, two wave bounce. That's where we kind of are in this thing. The third wave has begun and made a slight new low, but it's hesitant here because it knows if it breaks much further down, there's going to be a collapse and loss of confidence, and that third wave will go down quickly. Next thing you know, we'll be down 55, 65% in the S&P 500 or the NASDAQ, and then people will know this is not a correction. This is and it's not a mild recession. Now that economists are accepting that a recession is coming, they've been fighting it. Now they're saying, oh, it'll be mild. No way to have a mild recession after this much stimulus and the debt buildup bigger than ever. So we are very close to breaking levels in the U.S. stock market that will show us that, yes, the government, central banks are not able to stop this downturn, and as it proceeds, it's going to get worse and worse. It will be the crash of our lifetime, but the proof of that will require that we break to a new low and continue down, and I'm looking at the NASDAQ as the key index in the U.S., 10,088. We need to break through that convincingly, and then we should see much bigger down movements. And then, the government, of course, they'll pivot or they'll pause or even maybe start stimulating, but it'll be too late. That's the problem with the Fed. They waited too long to tighten here. Now they've tightened pretty fast, and they're looking to back off slowly, maybe do 50 or 25 basis points for the next one or two or so, and then probably end. But those things move forward. The biggest effects come, 9 to 12 months down the line. So I say, as I've been saying, the economy's weaker than anybody thinks. This tightening is going to cause a crash. We just need the markets to second that and break to new lows. And again, the NASDAQ, 10,088. That's what I'm watching. That happens. Watch out and recognize that China is the center of this global bubble, as the U.S. was in the Roaring '20s bubble. So the downturn there, especially in real estate, will be worse. I am literally projecting that real estate in Shanghai, where they lead it, could go down 73%. We were only down 26% in the Great Depression, 34% in the Great Recession, 2008 and on, okay? That is gonna have such a massive impact, and China has the highest net worth of their citizens of real estate of any country I've seen. Ours is 35 to 40, theirs is 73, 75%. This is gonna get ugly quick if we break lower. So look for this, watch 10,088. We're above that now. We've had a bounce. This bounce is likely to go a bit lower because we got very oversold here recently. But the fundamentals are down, and this bounce may look like a bounce to most people, but compared to the downturn, it's very weak and likely to turn down soon. So I will keep you updated. Keep listening.